Joining us now for a closer look at today's market action is independent global market analyst Boitumelo Letsuma. Boitumelo, good to chat to you once again. Bit of a quiet day on the markets, except for Pick and Pay, I'm afraid.
Yeah. Hi, Ray. Thank you so much for having me. And it's always a pleasure to be here. Yeah, it is relatively quiet today, especially on the JSE. But Pick and Pay, oh my goodness. We didn't really expect this. They did take out a trading statement, expecting that the headline loss for the year would be down by about 20% compared to last year. And the group said that, the sales were lower than expected. And they mainly came under pressure on the back, especially towards the end of last year. And one of the key things that stood out to me was that the competition is tougher in the lower end, lower to middle income market. That's where shoppers are more price sensitive. But I think that's where peers like, ShopRite have really remained resilient. So it does seem like the recovery story might take longer. And so those who are invested might need to increase their horizon in the name.
Yeah, I mean, Boitumelo, you can only feel for the CEO,
Yeah.
Sean Summers. They brought him back. They brought him back
Yeah.
to deal with this, and over the festive season, he saw that that downturn in sales. So that's the Pick and Pay story at the moment. So let's see what happens, like you say, for the rest. Looking at what's happening overseas, you've got that key economic non-farm payrolls data coming from the United States. That's due out
Yeah.
tomorrow. Inflation as
Yeah.
well. I suppose you're keeping a sharp eye on that too.
Yes, I am definitely. I think most people in the market are looking forward to these two prints because they will be key in determining interest rate decisions by the Fed over the coming weeks. And yeah, as you said, US jobs are coming out tomorrow, and the release was actually delayed. It was meant to come out last week due to that short-lived government shutdown. But with those figures coming in tomorrow, they are expecting to increase jobs by about 70,000. So the unemployment rate is expected to be around 4.4%. So that's with regards to the jobs. Now with CPI, I think this one is one that everybody will be looking at, and I think if the inflation does come above the 0.3% seen in December, we might see a retracing of that rebound, especially in the S&P as well as the Nasdaq. Yeah,
I
so
really want to
those
see
are
what's going to happen with the US Fed chair, what's going to happen next there, because it's all about inflation. And you may say that you want to go and decrease those interest rates because that's what your boss, the president, is saying. But let's see what happens with your inflation figure. Others to watch as well. We're watching Coca-Cola. We're also watching McDonald's. What are you seeing at the moment?
Yeah, those consumer reports, Coca-Cola will be coming out today. They are expecting a 4% increase in earnings. And what I'm looking forward to is more information around, the CEO transition. I understand that he'll be leaving the group at the end of next month. But yeah, I'm curious to hear how they will be handling this period. And they already have their succession plan in place for that departure. So that's a development I'm looking forward to. And then, like with regards to McDonald's, revenue is expected to also grow and beat estimates, but the firm has missed. Wall Street estimates before, so I'm not sure if they'll be able to hold on. So yeah, that's
Yeah.
definitely something I'm also looking forward to seeing
Seeing what's happening
this
later
week.
on this week. You would think
Yeah.
with both of them are giants. Both are giants. You
Yeah,
can't lose, but
definitely.
like you say, there's sometimes little surprises come along. Right, Cisco as well and Arista. I mean, crucial updates in infrastructure spending as well. Also, two very, very interesting facets to watch at the moment.
Yes, yes. For me, I feel like, I have my eye on Cisco. I feel like within this entire last week we saw the market's reaction to AI spending and how dire the consequences were. And so yeah, I definitely want to see more of how the market will react to Cisco. I mean, I think today I was just reading a little bit about it, and they announced the unveiling of their own silicon switch chip. And the product is meant to capture even more market share in the booming AI infrastructure spend. So yeah, that's definitely a development I'm looking forward to with Cisco.
Can you really lose with AI chips at the moment? Because I know it's like having the space race. Now, we used to have that, and there was this whole thing. But with chips at the moment, when it comes to AI, everybody is looking to get in there. And if you hook up with an Alphabet, if you hook up with one of the others, well, that's massive, isn't it? That's absolutely massive.
Ray, why would you make me laugh like this? Yeah, I honestly think that there's really a rush towards AI spending. Capital spending on AI, and one of the commentaries that were very interesting to me was from Nvidia's CEO Henson Huang, and he just spoke about how the tech industry is surging and how the infrastructure is justified because there is a lot of demand for what they're spending on, and there's therefore upside potential. But I think what we are mostly concerned about on the investor side is when exactly can we expect a yield on these high risk capital expenditures. So yeah.
Yeah, go and spend 170 billion Alphabet and see how long it takes you to get your money back. All right, hold that thought before we move on to your stock pick. Let's take a moment to touch on which counters your industry peers are watching closely.
I'll go down to M to Microsoft. I think this has been overdone. It might continue weak for a bit. I think down the line, I think you're going to pick them up at a very attractive price, bearing in mind that this is going to take a bit of time to get to get the returns. But I think all these AI companies are going to do very well from the investment they made, and I just like that Microsoft was sold down as hard as it was.
Okay, for Italtal. So you've seen a major recovery in South African bond market over the last 18 months, but it's not really been reflected yet in South African equity shares. So to give you an example, a business like Italtal, according to our calculations, their free cash flow is going to be between 15 and 20% for the next 3 years. So we think they can pay dividends of anything between 10 and 20% over the next 3 years because they've got a huge amount of excess capital. They're already in their cash position. They've already done all the investments they have done. And we think if there's an uptick in economic activity, they'll also have some growth as well. So we're buying it at multiples well below its historical means. This is a good company. If they were trading a better economy, the rating would have been much higher. But I think in the short to medium term, while you're waiting for this recovery, you're pretty much going to get double digits in dividends. So for us, it's a very good entry point at the moment.
Yeah. Right, so Boitumelo, there you have it. Microsoft, we were talking about that right now. And it's interesting that David Shapiro is saying that, going back to that. And he's not the first one as well. There have been others. So there's solid growth coming up.
Yeah, I mean, I saw a 3% uptick yesterday, and I think that was, on some basically what David was saying, that he feels that this is a bargain after the sell-off last week, and so we are seeing people buy the dip and bargain hunting. But I mean, management has been affirming their decisions around AI. But for me, although the PE is just below the industry average for Microsoft, I just remain cautiously optimistic, even though it is a great business. I think it is a long-term play, but it's something that I would just watch for.
Interesting, right? Italtal is another very interesting stock as well. I've been watching them quite closely and seem to be going up and down. But I suppose if it's on a down at the moment, that's a good thing. You can get yourself a bargain, maybe.
Perhaps you could. The stock has come under pressure, but for this stock in particular, it's been based on the earnings decline over the past couple of months, And we did see some, I mean, the past couple of years, but we did see some like marginal growth last year, but nothing compared to where it was around 2022. So, the asset turnover is relatively low, but they do have a strong balance sheet. And I think the main attraction here is the dividend. So, especially for investors that are looking for income. So,
Yeah.
if that's what floats your boat, I think it's Hotel
There
could
we
be
go.
the one for you.
Right. So what floats your boat looking at stock picks at the moment? What are you looking at the moment?
So yeah, in keeping step with diversifying my risk away, I mean, I do like, the likes of the Max 7 and all the talk about AI, but I think it's important to diversify your risk a bit more. And so I'm picking the Satrix MSCI World Index. I think it offers, a good low cost entry way to gain diversified exposure to developed markets. And it allows people to access many global companies across, Japan, the UK, and particularly across the Mag 7. And all of this can be found in one instrument. So it's ideal for those looking for long-term capital. And I think it's a disciplined and efficient portfolio holding to have around.
Interesting. It's a solid group, Satrix. It certainly is.
Yeah.
Boitumelo, thank you so much. Good to chat to you once again on Business Lunch. That was independent global market analyst Boitumelo Letsuma.